Thank you, Meghna. Thank you very much, Dr. Kumar. Always very insightful to hear you. And I've always believed that there are very few people who truly understand how the Indian economy works, the nuts and bolts of it, and you are one of those few people. You have been a policy maker. You were with Niti Aayog. I remember you when you were heading CPR. So you have seen how policies are formed and how they get implemented. I want you to walk down your memory lane for a little bit and help us understand this government's approach towards infrastructure. Since you were part of the team which probably laid out the blueprint for what we see today, how different is it from our earlier governments? What is the focus area that the government is trying to accomplish through this concerted push towards infrastructure creation?
Yeah, so Shweta, I think the principal sort of feature of this government's approach is that Indian enterprise, Indian companies should not face the logistics deficit that they have faced perennially. And that because that makes them globally uncompetitive. And that's the key of it. I mean, that's where it starts. And therefore, a special department in the Ministry of Commerce, looking at logistics. That is why the Gati Shakti, that is why the 100 trillion rupees, push and allocation and target for that. Now, and the other part, and which is, by the way, this is a critical, very big part, and combined that is with delivery. So not just plans on paper, but then you've got to achieve that, and this is where Mr. Gadkari's contribution is just amazing. And I think now Mr. Vaishnav's contribution will also be equally amazing. And again, we don't normally talk about telecom as infrastructure, but that's also because I slipped up in it because very often I think we should talk about infrastructure as improving connectivity. And once you do that, you bring in telecom, digital already in it. And that, I think, should be the focus. But very often, infrastructure gets, as we've said, as I've slipped up into railways, highways, and so on.
Sure.
So, and I'm sure Mr. Ashwani Vaishnav's lead in having this huge 2.5 lakh crore investment into railways. Never been done before. And that's again, so the other aspect of the feature of this approach is that we will go multimodal. We will not do only one kind of, infrastructure development. We will do all that's possible. So in the Northeast, we'll get airports first because that's the way to, to take the goods and people out of there. So number of airports has gone up, I think, 3 times or something like that.
Right.
We will do waterways to reduce our cost and make it greener. And that's a little bit, and multimodal because, and waterways, the development is critical, is quite sort of complex because you've got to connect the waterways with your existing infrastructure of railways and roadways and so on. So and multimodal, as I said, and so highways, railways, all of it, and then interconnected, with each other. So that's the other big approach. And I think and then finally, I think the approach is that and that's a part that hinterland development connecting your export, hubs to the hinterland, and which is and maybe laying special railway lines on that, to get the outage going, etc. I think those are the 3. And as I said, and all that I said was also part of government's approach because innovation is a part of it, equity, Northeast development and rural roads, which have again increased huge numbers. So that's that in my view. And then clearly long-term targets.
Right.
So we got to go there. So not just short-term. And hopefully, and Prime Minister is very clear that short-term political agenda does not and will not interfere into this infrastructure development.
Right. So, the foundation for this infrastructure push was laid long time ago when Mr. Vajpayee conceived and executed the Golden Quadrilateral project. And then of course, Mr. Modi has carried that forward in terms of increasing spending, in terms of having a vision of this multimodal connectivity. The one thing that we saw with the Golden Quadrilateral project was that while it connected the big cities, it's the rural areas that got left out. So I just want to go back to what you just said, that infrastructure creation needs to be green, it needs to lead to equitable growth. So the kind of infrastructure creation that we see currently, if you were to break down for us, how will it play out in the economy, the economic impact of it? That would be, I think, very helpful for us to understand the clear impact of what we are witnessing around us.
Yeah. By the way, it's quite amazing and credible that even The Economist has taken note of this in the latest issue.
Yes, yes.
India on the Move is the article, and so it's talking about that India, like China, is now pushing. So, so the government must have done something right for that to happen. And that government getting it right is basically that the capex required for this infrastructure development has always been, for times immemorial, a public sector capex, because these are the general, these are the basic conditions for production. And the way it improves economic prospects is, one, it itself creates value and generates jobs. That's the first part. The second part is that I don't have the numbers exactly, but the multiplier effect of this is very large. And I think in a common sense way, you can think of, if you construct highways and the amount, all infrastructure is supposed to have about 200 backward linkages, that going backward. So
200.
All sorts of sectors get. So that's the second, the multiplier, and therefore the economy-wide impact of it, including in employment generation. The third is, of course, the ease of doing business. So if you get good highways and railways, and you get electronic tolls, etc., the movement of goods and people, if you like, becomes, especially goods, I think that's very important. And I think this is where we need to focus much more on, because the economy's competitiveness, the economy's growth potential is much more dependent on an easier, faster, less expensive movement of goods and services, if you like, because through the digital economy. And that's the third one, which is very important. And the fourth, as I said, is that when you get the rural infrastructure in place, then again you can have economic development, which is very different from that which has happened in Asia and otherwise, that you can't possibly create 20 million kind of population cities in India and hope to take it forward. You've got to expand it, but in an efficient manner, not increasing costs. And that's what again the rural infrastructure can do. But in this sense, the very important part of that is played by the digital economy. Because now with the new era, as you've seen in COVID, etc., the availability of the bandwidth and therefore the 5G and so on, and will become maybe as or even more critical than the physical infrastructure that we normally think about. And the other part of it, which is again not talking about, is the boost it gives to tourism. And because India doesn't attract as much foreign tourists as our potential is. Our potential is absolutely huge. And that's very often because of poor infrastructure, facilities and connectivity that you need to go to. All of this, so I mean, in one word, the impact of the infrastructure in the economy is just probably the biggest of all sectors and of all economic activity.
So at a time when economies across the world are cutting back spending, are bracing for a slowdown, would you say that our focus on infrastructure will act like a protective cover around India? Is this something that will keep the economy going?
No, not protective, but attractive.
Attractive.
Because we will be able to attract the investment that is required. Because of the better infrastructure. People, and the India story, which is already rather strong, quite strong abroad, will become stronger. The people will find that there are many more opportunities, locations, geographies which, where they can come and invest. So in this world where, and that will then lead to India becoming a major driver of global growth as China slows down and as the West, as the OECD countries continue to kind of stagnate at very low levels of growth. The baton for global growth would come over to India because of this infrastructure and, as I said earlier, of education and skills. The two combined can make India the propeller of global growth in the next 25 years.
So, considering this is the year of India's G20 presidency, like you said, India is one of the most attractive countries to the world. Would you say that this is India's moment? And also this is a pre-election year. So we don't want to slow down, and the government is focusing on creating jobs through infrastructure creation to ensure that the economy keeps running and keeps firing on all cylinders. So if you were to take a macro view, if you were to zoom out and see India right now in the context of what's happening in China, what's happening in the US, what's happening in the European economy, how would you rate and rank India's economy?
Let me repeat the cliche, which is that we are the fastest growing, largest economy in the world, and we will remain so for times to come. I think this afternoon we're talking about this. And somebody was asking me, why do you say it's India's moment in global economic history? But I don't need to, detail that. But both, for the first time, I think, the global conditions are in sync with the domestic conditions, and they're both propitious. India, whether it's friendshoring or it is de-risking the national risk in China, yes, there is a Vietnam, etc., but there are not too many Vietnam that offer an alternative to the India investment scenario. So, and the domestic policy is also, geared completely towards this. So I think this is where I feel is that, and which is the basis of my optimism of our 8% rate of growth of GDP comes from there. So okay, it will not be achieved in FY24, and because of the COVID and other things that our rate of growth is going down, but has gone down to a certain extent. But I'm confident, actually confident, that given all that's happened here, and given the global situation, India growth rate, and that's the macro picture, that we will be the epicenter of global growth for the next 2.5 decades, or even longer.
Wow.
By the way, and because also of our demography, if we can convert our young population into employable, skilled people, and which the national education policy is very, very focused on.
Right.
But we need to do much more because in that, then you got infrastructure, you got energy, and you got skills. I think it's good going.
So we've got all the essential ingredients.
Yeah, and our entrepreneurship is actually is world famous for a very long time. I mean, by the way, I know I'm sure everybody knows here that Angus Madison's work, which said that in 1st century AD, we were more than 30% of the world economy and 16% of our world population, which is why young Alexander came looking for us.
Right.
Now, so and that was all private driven. And this is my firm belief, and I said this many times in Niti Aayog, is that India will grow only and only if the private entrepreneurship and private investor and private businesses get the necessary push or just the conditions for growth. And because that's happening, much more, as I said, hard work, not complacent at all. Right. I said, therefore, we need to work very hard. We need to go out of the box. We need to think about, not just the top 5,000 companies or 3,000 companies, but the whole depth of our private enterprise, and make credit and technology and market accessible, etc. But the process is on. You read. So I can go into detail, but this government is clearly aligned to this view that it is the private sector which will make India's story happen. And let's do whatever we can to do so.
But over the last decade, if we look at the data, private investment has not kept pace. In fact, it's fallen. So what is it that's holding the private industry back from investing?
I'm not sure about the answer because it's, we have had, anyway, the COVID is just part of it, but maybe a degree of uncertainty in the private investor's mind about how policy, and one of the things is, I hope I'm not, let me put it, if all policy changes would happen prospectively and don't have a retroactive feature to that, the private investment would feel far more secure and less uncertain about the future of his or her, prospects of his or her investment. I think that's, and the other part of it is, of course, that the introduction of the GST, etc., has changed the climate for the small and medium enterprises, which have got to learn to get into this, new regime, and that's happening. And as that happens, basically, I'm talking about the formalization of the informal economy, because that informal and that the process has begun, and as we get more integrated into it, then our supply chains will become longer, and our smaller guys will also become part of not just the domestic but also the regional and global production networks and global supply chains. And that change, that regime change, is perhaps one of the reasons for which you are seeing not, and I would say not yet, the much more, much more buoyant response. But I'm convinced that it will happen, and because of all the liberalization that's taken place. So let's. Yeah.
So do you see the tide turning soon, though?
Sorry?
Do you see the tide turning soon in terms of private investment? Do you see the
Yeah, I think so. I think very much so. And both foreign and domestic investor will recognize very soon that this government's clear intention is to help it, along and is to promote it. And the PLI scheme is the best example of this. And I'm not sure what the latest numbers are, about how much investment has been attracted into those 13 sectors, but I believe it's quite significant. And the fact that you've got...
Especially in the electronic space, yeah.
Electronic, but also in others. I'm told that steel and electric vehicles and battery storage batteries, etc., all textiles, now the recent announcement of the mega textile park. I think all of that, this is in the making, and there's a gestation period. But I'm sure that you will see that as we go forward, and if these 14 sectors, which are sunrise sectors, if they get up, get the capacity that we are planning to, with the $26 billion incentive, layout, I think things will change completely. By the way, the other thing that I wanted to say is that we don't look deep enough into our burgeoning services economy. The health and the education and the IT and the IT-enabled services, etc. That's now increasingly, much larger than it was before. And quite often we don't discuss the private investment that's happening there. One part, two, the startup, phenomena that's happened. The number of unicorns, they'll not compensate for the big established business, but that's the second one. That will take the thing forward. And finally, the agricultural transformation. Agriculture employing nearly 50% of the workforce, producing only 18% of the GDP, shows the extent of backwardness. And there again, the government has really focused a huge amount now, into agriculture, agro-processing, precision agriculture, chemical-free agriculture, what we call natural farming, all of that. And I think, again, this is, it's going to take time, but all the necessary conditions are there in place for private investment to happen.
Okay, well, we do hope that this comes true. My last question is on what we are witnessing in the U.S., the banking crisis. Somewhere we do get nightmares about what happened in 2008. Will we see a repeat? What kind of an impact should India brace itself for, considering what we are seeing in the United States? I wanted to get your thoughts in on that.
I do remember that 2008-9 crisis didn't affect Indian banking sector. The little hiccup, and I was on the board of the SBI at that time, was with the ICICI Bank, which had overexposed itself in its London branch, had overexposed itself, and the SBI moved in very quickly to cover that. And Mr. Y.V. Reddy took care of the fact that the Indian banking sector remained, in some sense, quite protected. I think the same scenario will play out now, because our banking sector is quite well regulated, but more importantly, very well capitalized. Our capital adequacy norm here is even higher than recommended by Basel norms. So I mean, all the large banks at least have more than 14, sometimes even 16% as capital adequacy norm, and therefore that gives them the resilience, to bear with this. And in any case, although the share has declined, the share of the public sector banks is still very large. Whether it's under assets under management or trade, etc. And that's backed by the government guarantee. So to that extent, it's explicit. And therefore, I doubt, not only just doubt, but I'm confident that the Indian banking sector, unlike the Indonesian or the Korean, etc., which were impacted by I don't think this US thing will impact us in a big way. Now, these can be very brave birds, but who knows, after Credit Suisse and so on. Sure. But I feel quite confident that we've got our banking sector well covered. By the
All right. Thank you so much, Dr. Kumar. Always a pleasure speaking with you. Can we have a round of applause, please?
Thank you, Shweta and Dr. Kumar, for an insight.